Hello and welcome to Smart Finance Investor. Today, we have an exciting topic to discuss that has the potential to transform your financial future: investing in dividend stocks for passive income. Whether you are a seasoned investor or just starting, this video is packed with valuable insights to help you build a steady stream of income from your investments. Section 1. Understanding dividend stocks. Dividend stocks are shares of companies that regularly distribute a portion of their profits to shareholders in the form of dividends. These dividends provide investors with a reliable and predictable stream of income. Understanding dividend stocks involves recognizing their role as income generators in an investment portfolio. These stocks are typically associated with well-established companies that have a history of financial stability and a commitment to rewarding shareholders. Investors often value dividend stocks for their ability to provide not only potential capital appreciation, but also a consistent source of passive income, making them a valuable asset in achieving financial goals. Section 2. Benefits of dividend stocks. Investing in dividend stocks offers several advantages. Firstly, they provide a dependable source of regular income, making them attractive for income-oriented investors. Additionally, dividend stocks often display resilience during market fluctuations, helping to cushion against volatility. These stocks are typically associated with financially stable companies, providing a sense of security to investors. Dividend reinvestment can accelerate wealth accumulation, and the favorable tax treatment of dividends in many regions enhances overall returns. Moreover, dividend stocks encourage a long-term perspective, aligning well with wealth building and retirement planning. Their dual benefit of potential capital appreciation alongside income generation makes them a balanced choice for investment portfolios. Section 3. How to choose dividend stocks. Selecting the right dividend stocks is vital for building a successful income-generating portfolio. Start by focusing on companies with a history of consistent and increasing dividend payments, as this demonstrates financial stability and a commitment to shareholders. Assess the company's financial health by analyzing metrics like debt levels and earnings growth. Diversify your investments across various sectors to reduce risk, and consider the company's payout ratio to ensure it's sustainable. Evaluating the company's competitive position within its industry is essential, and staying informed about its growth strategies and market dynamics is key to making informed decisions. Lastly, continuous monitoring of your investments is crucial to adapt your portfolio as needed. Section 4. Assessing dividend yield. Assessing dividend yield is a crucial aspect of selecting dividend stocks. Dividend yield represents the annual dividend payment as a percentage of the stock's current market price. It provides insight into the income potential of an investment. While a higher yield can be attractive, it's essential to consider it in the context of the company's financial health and stability. An excessively high yield may signal financial risks. Comparing the yield to similar stocks and historical trends can offer valuable insights. Additionally, understanding the payout ratio, industry norms, and the company's dividend policy contributes to a well-rounded assessment of dividend yield and helps investors make informed choices. Section 5. Dividend reinvestment plans. Dividend reinvestment plans, offered by companies, enable shareholders to automatically reinvest their dividend payouts into additional shares of the same stock. This strategy leverages the power of compounding as it eliminates the need to receive cash dividends, allowing investors to accumulate more shares over time. They are known for their simplicity, often offering this service at minimal or no cost, making it an economical choice. They encourage a long-term investment perspective and provide flexibility for investors to opt in or out as needed. However, it's crucial to consider tax implications. Overall, they are a convenient and cost-effective way to build long-term wealth through a combination of dividend income and capital appreciation. Section 6. Tax considerations. Tax considerations in dividend investing are essential. In many regions, dividends receive preferential tax treatment, often taxed at a lower rate than other forms of income. However, the specific tax treatment can vary based on factors like the type of dividend, your tax bracket, and local tax laws. Understanding the tax implications of your dividend income is crucial for effective tax planning. Additionally, be aware of tax-advantaged accounts, which can provide a tax-efficient environment for dividend investments. It's advisable to consult with a tax professional or financial advisor to optimize your dividend investment strategy in line with your tax situation. Investing in dividend stocks is a powerful way to generate passive income and build long-term wealth. By selecting the right stocks, managing your portfolio wisely, and staying informed, you can create a reliable income stream that supports your financial goals. If you found this video helpful, please give it a thumbs up, share it with others looking to boost their passive income, and don't forget to subscribe for more financial wisdom. Thank you for joining us today.